Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for Thursday, October 8th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals is like having risk radar for the U.S. stock market. Today we were up 0.8% on the S&P 500, and we closed at 3446.83. The chart that we will be working off of today is a daily candlestick chart of the S&P 500 dating back to the first trading day of August, which was August 3rd. And with today's closing price of 3446.83, this was only the 9th day in the history of the S&P 500 where we have closed above 3440. That's this top blue line here, and only the 11th day in the history of the S&P 500 where we have closed above 3420. That's this line here. So the fact that we're now closing towards the highs ever in the S&P 500, of course, the all-time high was set back here on September 2nd, but the fact that we're closing above 3420 and 3440 again on the S&P 500 could be really good news if we can continue to sustain these levels. So we will want to see the S&P 500 follow through over the next few days and hopefully few weeks and continue to close at these levels. And if we can continue to close above 3440, especially on the S&P 500, it really shows how this market is looking through the current situation in 2020 with the coronavirus continuing to spread and earnings on the S&P 500 likely to still be at least 20 to 25% lower than what they were in 2019. So keep that in mind that, we are, of course, experiencing expanding multiples. The market wants to see more stimulus. Just keep this in mind that we are back in rarefied air here. This 3420 to 3440 area will be a very important area for us to continue to close above if we're going to keep this recent rally intact and continue to keep the market moving higher. Now, if we roll over and start to close below 3440 and then 3420, we would most likely find ourselves back in the trading range of 3330 to 3420 on the S&P 500. And you can see that the majority of the trading in the S&P 500 since the first part of August has been between these levels. Again, that's 3330 and 3420. So as long as the 3330 level holds up, even if we can't continue to close above 3440 or 3420, as long as the 3330 level holds up, we're probably going to be okay. Obviously, if we, close below 3330, then we would drop down to this next support level, which would be 3210 on the S&P 500. And as we can see, going clear back to the first part of August, we've only seen the 3210 level once, and that was back on September 24th, where we came down and kissed that level intraday, bounced off of that, and then, of course, just a couple of trading days later, we were back above 3330. So this 3330 level is super important on the S&P 500, but in the near term, what we will want to watch is the 3420 and 3440 area, and as long as we can continue to close above those levels on the S&P 500, we're probably in pretty good shape here, even in spite of the continued spread of the coronavirus and deteriorating economic conditions. And this just once again shows how the stock market and the economy are not the same thing. And this is also why that I focus most all of my work on the stock market and not the economy, because economic data is lagging data, and this price action alone over the last couple of days really illustrates what I'm saying here, that the economy and the stock market are not the same thing. We need to focus our attention on the stock market, and that is exactly why my work in Simple Market Signals, my proprietary model, is focused on the stock market itself. So if you're not yet a subscriber to Simple Market Signals, I would encourage you to take a serious look at what we do here. It is an incredible value at less than $20 a month. Simple Market Signals helps financial advisors and individual investors in both up and down markets. And Simple Market Signals really is like having risk radar for the U.S. stock market. Let me ask you a question. Do you have a stock market risk management system? Something that helps you understand the various risk levels in the stock market on an ongoing basis? Do you know when it's safest to be in equities? Do you know when it's most dangerous to be in equities? Do you know the direction of the short-term trend on an ongoing basis? Do you know the direction of the overall trend in the stock market? My system is called Simple Market Signals. Simple Market Signals is market-based. There's no opinions, forecasts, or guesswork in Simple Market Signals. It took me over 20 years to develop Simple Market Signals. I developed Simple Market Signals by reverse engineering the stock market, and I studied the stock market over numerous time frames, including in numerous bull and bear markets. And what I found is that certain conditions exist during these various market phases. And then based on that information, I created simple, easy to understand signals around these different phases of the market. And the thing is that most people don't know about or have access to the data necessary to do the research that I had to do to put together this model. Now let's take a look at the signals. The red signal has the highest equity risk associated with it, and the worst sell-offs, including bear markets, will happen when the signal is red. When the signal is yellow, this means that equity risk is moderate, and sideways to slightly up or down price action is very common during a yellow signal environment. The green signal is the best signal. It has the lowest equity risk associated with it, and most all upward progress in the stock market will be made in a green signal environment. Said another way, it is very hard to make money in equities unless the signal is green. Okay, a quick refresher on the Simple Market Signals weekly signals and how they can help you. The signals are green, yellow, and red. The green signal is the best risk-reward ratio for equity investors, and what you're going to find is that the stock market makes most of its upward progress when the signal is green, okay? The worst risk-reward ratio signal for equity investors is when the signal is red, and what you're going to find is that bear markets and the worst downturns in the stock market happen when the signal is red, like during the 07 through 09 bear market, as we see here. So again, the best risk-reward ratio signal for equity investors is when the signal is green, and the worst risk-reward signal for equity investors is when the signal is red. Now let's take a look at the first 3 months of 2020 so you can see how Simple Market Signals could have helped you in the most recent downturn. We know that we came into the year with a strong stock market, so we had a green signal for the majority of January, but on January 27th, the signal went yellow for a couple of weeks. We went back to green in the first part of February, and I warned my newsletter subscribers on Saturday, the 22nd of February, that I felt like the market was starting to roll over and that things were changing. And so I gave people a heads up right here over the weekend, and I told them that if the market continued to sell off, that we would probably see at least a yellow signal, if not worse, the following week. And that's exactly what happened. On the 24th, the Simple Market Signals risk signal went yellow. Now, one of the other things that I want to point out here is, in addition to the risk signal, I also have several trend direction indicators in this Simple Market Signals model. Now, the longer term one is called the general trend indicator, and the general trend indicator went negative on the 25th. So on the 24th, the signal went yellow. The general trend indicator went negative on the 25th, and then 2 days later, the signal went red. The risk signal went red. So think about this. All in 1 week, just a few days apart, we had a yellow signal, we had the general trend indicator went negative, and then we had the risk signal went red on the 27th. That was Thursday, all right? And by the way, This general trend indicator is a positive negative signal, and it operates totally independently of the risk signals. It's just trend. So the general trend indicator gives you still another way to monitor and control risk in your portfolio. And guys, that general trend indicator had been positive since October and then went negative. So right there, just those two signals alone told us that something was changing in the stock market. And then by the 27th, the signal had went red, and we can see here that the market fell from there. As part of the Simple Market Signals model, there are three powerful indicators. There's the Simple Market Signals proprietary risk level signal. There's the short-term trend indicator, which helps clarify short-term moves in the overall U.S. stock market. And a normal signal length for the short-term trend indicator is anywhere from 1 or 2 days to 7+ weeks. Then there's the general trend indicator, which is designed to stay positive during the bulk of most uptrends and negative during the bulk of most downtrends. And a normal signal length for the general trend indicator is anywhere from 2 weeks to 5+ months. We disseminate the information through the Simple Market Signals weekly newsletter. In the weekly newsletter, you will receive the proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signal on all 11 major sectors of the S&P 500. You will also receive the short-term trend indicator signal. You will also receive the general trend indicator signal. You will also receive market and sector performance information over multiple time frames. You will receive a recap of what happened in the stock market for the past week. You'll also receive technical analysis information, fundamental analysis information, and yield curve information. There is a ton of information every week in the Simple Market Signals newsletter. And a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents per day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. And guys, I want to set realistic expectations here, okay? The newsletter isn't fancy. It's effective. It's plain text, no color, no fluff. And please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, that is just due to international compliance regulations. Now let's recap what you will get with your Simple Market Signals subscription. You will get the weekly emailed newsletter with all of the contents we just talked about. You will also receive special midweek updates when warranted. So if there's a major signal or direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to get that information to you as soon as possible via a special midweek update email. The best fit for a Simple Market Signals subscriber is an investor or trader with at least a 6 to 8 week plus time frame that they're focusing on. If you're a day trader or a really short-term trader, Simple Market Signals may help you a little bit, but the reality is Simple Market Signals is designed for those investors and traders with at least a 6 to 8 week plus time frame that they're focusing on. And if you would like even more information about how you can benefit from Simple Market Signals, I have the following videos that will be linked in the description box below this video. And to subscribe to Simple Market Signals, you just need to go to the website that you see on the screen here. That's https://simplemarketsignals.com. It'll take you about 4 minutes to subscribe. It's that easy. Once you reach the website, the first thing you will need to do is accept the cookies. Please notice that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to use this website or our services. And that is just due to international compliance regulations. All right, so to get started, all you have to do is click this green button, and that will take you to the product page. And this explains, of course, what you get with your subscription. And then just make sure that that says 1, because if there's more than 1 in there, if you have a 2 or a 3, you'll get multiple subscriptions to the service and you only need 1. Click the Sign Up Now button, and that will take you to the checkout page. Once you're on the checkout page, fill in the necessary information, anything that is required, including the email address. Keep in mind that this is an email newsletter, so we will have to have your best email address on file, and make sure this box is checked because that's how your email address gets into the system. So if that is unchecked, your email won't get transferred into the Simple Market Signals system and you won't get your newsletters. So please make sure that box is checked. And then, of course, just double check, make sure that your monthly total is going to be $19.95 a month. Remember that your first 2 weeks are free, so your first renewal date will be 2 weeks after your subscription date. Fill in your credit card information. You will need to accept the privacy policy and check that box that says you've read and agreed to the terms and conditions. Click the Sign Up Now button, and it's that easy, guys. It's probably going to take you maybe 4 or 5 minutes total to fill in everything and subscribe to Simple Market Signals. Now, when you subscribe, okay, understand that everything is tied to your email on file, all right? So once you subscribe, you go out to the website, simplemarketsignals.com, and it'll take you maybe 5 minutes to subscribe. It's pretty easy, and you just follow the prompts, and then your email on file is then going to drive everything going forward. This is an emailed newsletter subscription. That's how we disseminate the information, and you should get an immediate emailed confirmation of your subscription. You will also receive an automatic welcome letter that is automatically generated once you subscribe. So if you don't get that welcome letter beyond your confirmation, okay, of the subscription, if you don't get that welcome letter, if you don't see it in your in-basket, then go check your spam, your junk, or your promotion folders, especially in Gmail. Having a lot of people that are having the newsletters and everything coming from Simple Market Signals going into the promotion folder. So please make sure that you check your spam, your junk, and your promotion folders. And also understand that the newsletters go out on the weekend, all right? So the goal is to get it out Saturdays by 2 p.m., but it could be any time over the weekend depending on how long it's taken me to do the research necessary for that week's newsletter. But I try to get it out by 2 p.m. Eastern Standard Time every Saturday if I can. Again, earlier if I can make that happen. And then the next edition, right, once you subscribe, understand that the next edition, right, so if you just subscribe on a Monday, Tuesday, Wednesday, whatever, the next regular edition is going to be set out on Saturday, all right? And then once you subscribe, we will send you, as soon as we can, the latest edition, but we have to send that out manually. So just be patient with us. But again, within a day or two of your subscription, if you don't get this latest edition, then go back and check your spam, junk, and promotion folders, because it's probably hidden in there, all right? So you should get the automatic welcome letter and then the latest edition within the next day or two of your subscription. And then again, the standard newsletter goes out every weekend, but we try to make it no later than 2 p.m. Eastern Standard Time on any Saturday.